Good evening, ladies and gentlemen, and welcome back to ETBFSI Budget 2022 live series. I have with me the next speaker, who's the Chief Economist of RBL Bank, Ms. Rajni Thakur. Rajni, glad to have you.
Thanks, Amol. Pleasure as always to be on this forum.
Thank you so much. So I think there is a lot of positivity. I have been talking to set of panelists. I spoke to a banker, then I spoke to insurance players. So they showed some negativity because there is nothing on the GST front or the tax slab sides, which generally boosts the insurance companies. Then I also spoke to an NBFC player who's also very positive about the infrastructure development and believes that the consumption will grow. So to begin with, what kind of big or booster the government has given through the budget, and do you think that they have managed to maintain the balance between capex and consumption, which we were expecting actually?
So I'm sure each of the speakers, and I have been watching this program live, have their own perspective from the industry they're coming from. As an economist, when I look at the budget, the whole macro landscape is very, very critical for me to understand it. We are in a year when the pandemic uncertainties are still hanging. They've not gone away completely. At the same time, it's the post-pandemic budget in certain ways. There are certain uncertainties on the consumption outlook. Government needs to front load investment till the point it can crowd in private investment. At the same time, for monetary policy to start normalizing without tightening the financial conditions or financing conditions for private investment, it has to start on a way of fiscal consolidation as well, gentle fiscal consolidation as well. So on one side, it has to pump run the economy. On the other side, it has to get onto a certain way of fiscal consolidation path too. And to that extent, it was a very pragmatic, very realistic budget, is what I would say. True, there were some boosters missing or some feel-good component that on the taxation or many sides that generally touches the sentiment side. But I would overall kind of rate it as a very pragmatic, very realistic, and focusing on the structural issues kind of a budget.
Okay, so on that missing aspect, I will come to you and maybe ask you what is missing in the budget. But let me ask you immediate question here. Since the industry was expecting capital expenditure from the government side, they were expecting a big boost on the infrastructure side, which is there now. 35% is unusual compared to what the government used to do it earlier. Do you think now the private consumption, private investments will pick up? Do you think that the corporates will not think twice before investing or before making their capex plans?
So, I mean, yes, on a YOY basis, there is a almost 34-35% increase in the current year and another 25 projected for next year. So that's a big boost in capex expenditure. And overall, we're like touching 20%, not really 18% of the total expenditure on the capex side. The whole idea is to set up the infra and all necessary backup in a way that it crowds in the private investment. But when we start thinking from the private investment perspective, there are a couple of prerequisites. One is on the global growth side, which we saw present in last year. The other is, of course, in terms of predictability and stability on policy side, which budget and the previous announcements before this has kind of been able to provide. There is a requirement in terms of corporate balance sheet being very active and healthy to leverage on growth. That's present at this point of time. The fourth element that still kind of hangs in uncertainty at this point of time is the excess returns expectations, to be realistic. The demand conditions, the demand outlook for the year beyond the pent up and normalization is still not clear when you talk to investors at an individual level. Till that comes in, and going by what economic survey has shown yesterday, in fact, there is some data on household liability and asset, and it kind of shows huge financial savings on the household budget. If that is indeed the case and it starts showing on consumption level, then it should be able to crowd in private investment. But for now, there is a tentativeness till we see demand conditions strengthening beyond doubt. And probably through the first quarter of the next year, we'll still see some of it coming in. But once private consumption has caught up onto pre-COVID levels, we should see private investment coming in because all other conditions are existing and strengthening the outlook, investment outlook. There's just one factor that's still weak. Hopefully that catches up.
So what is that factor? Are you talking about inflation? And also, if you
So that
Yes.
factor is on the consumption outlook. I
Yes.
mean,
Yes.
many of us economists have been batting for the K-shaped recovery in terms of income hit in the
Yes.
informal sector, in terms of how this is likely to drag on to the overall consumption going forward if this is not answered or addressed. And that's actually something that I see missing in this budget as well. Both the survey and the budget, I don't see an acknowledgement of the fact that there are some uncertainties on the consumption outlook. The policymakers seem to believe that we are running strong on consumption as well and will catch up. And I hope they are true for all our sakes, actually.
Right.
Um, I am yet to reach that conclusion given the data points that we are seeing. But if we do, then we'll see private investment coming in. If and when we do, at this point of time, that's one uncertainty that's hanging. So it's more on the consumption, which gets determined by income levels, rather than purely on the factor that market kind of tracks on inflation or borrowing. So those would be more critical signs for me from the budget.
Right. So, what I'm learning, from various experts and what I understood by copying the finance minister is this is a long-term budget. They're taking a view of 25 years because we're in a Azadi Mahotsav of 75th years and we are thinking about the 100th year. And we are, thinking about that year and considering and crafting policies according to that. That is one aspect of it. On the second side, everybody believes that this is a long-term, budget. Do you think that what we should do for next 25 years is there in this budget? Do you think that we are actually doing or just we are talking about it?
The answer to it is a little more nuanced.
Okay.
Does it lay out the thought process or the intention in terms of getting the structure right for next 25 years? Yes. I mean, there is a beginning of policy thought process in terms of skill development, in terms of digital infrastructure, in terms of uh, integrating all infrastructure,
Right.
rail, roadways, air, in terms of logistics as a big part if the economy has to grow. So, some of these thought processes are being laid out. Uh, it's just a start. For it to be really showing up in the economy in terms of productive gains is, I mean, as all infrastructure spend is generally a 3 to 5 year process. So for it to show up will take some time and hopefully we stay on track. So what it does is it builds up on lots of thought process we saw last year, consolidates some of those in terms of permanent stimulus as they called it. But
Right.
it's yet to show up gains, of course, given the nature of investment we're talking about.
Okay. Let me shift your focus to inflation. I mean, US is there. I mean, the policies, on schedule. The RBI policies on schedule. At one side, the principal economic advisor said that we still have a space for the fiscal in his economic survey. My question to you, Rajni, is how worried are you about the inflation?
So my view is on inflation is a little different from most of the economists at this point of time. We have to remember that Indian economy is not US. I mean, inflation is a US problem in genuine case, unlike in India where it's more of a supply shortage. So I do tend to agree with lots of policymakers that this is transitory, this is more supply shock driven, and this will normalize as post-pandemic world normalizes. So does it erode away from disposable income in short term? To a certain extent, yes, but it's not likely to be long lived. So I wouldn't really worry too much on inflation at this point of time. There are likely to be some data points where it crosses the target range in certain ways, but not for meaningfully longer way where it starts eating on disposable income. So
Okay.
most of the expectation still for next year is around 5.5. True, currently, given the way crude oil prices are looking, or given many of these uncertainties at this point of time, it looks difficult to believe. But give it a couple of months and then things should start easing off. January just coincided with both geopolitical uncertainties and also Fed taper to happen. But as you've seen, even in the case of taper, there were a couple of days of high volatility and it has already started to ease out. So hopefully, it should be a short-lived issue for Indian economy. And if and when there is a genuine case of inflation where we see demand level rising, wage levels rising, except in certain pockets that we see now, then it's probably a good problem to have. Then I, in any case, won't worry too much about it.
Okay. We were not doing great even before pandemic. I mean, obviously, we had certain growth numbers there. We were doing better than many other countries for sure, but it's not that we were really aggressive before even pandemic. So sometimes, I also don't want to believe in this theory that did we reach to a pre-pandemic level. I think it's better we create some another level, altogether. Uh, so thinking about creating another level or maybe approaching to a $5 trillion economic dream, what do you think the government should have added in the budget? What maybe one or two factors you wanted to see in the budget which you could not see?
So you're right. We were not doing great pre-pandemic. In certain ways, I think that pandemic kind of at least triggered the government to support the economy in certain ways. Otherwise, we could probably have seen worse days as well. Uh, so coming back, yes, we were not doing great, and that's why this whole need for some structural steps in terms of skill, in terms of health, in terms of infrastructure, were long overdue, much before pandemic came, and we were talking on many forums before that we do need to see some steps towards that. And what pandemic has done is kind of bring the thought process away from fiscal consolidation towards front loading the economy in terms of investment and consumption. So I, in that way, in that sense, look at it as a more fortuitous development. This is just a start. Does it answer the immediate risk on consumption levels? Not really. But what it does is it starts addressing some of the structural issues that were causing a hit on the trend level of the economy. What we still don't have, and I wish this budget or economic survey had given us, was a certain sense of what's the potential level. There is an output gap, is something that all of us say. At the same time, we do want to understand that how much are we potentially able to grow. It's like a big bang start of a big bang episode where you know that you're setting the right triggers for the potential level to grow up, but it's difficult to figure out an exact sense of what would be a good growth rate at this point of time to consider. Do remember that for the kind of employment numbers we want from the economy, it's important to stay above 7 to 8% growth rate for a consistent 5 to 6 years to really not drag the growth story. And it is important for us to kind of remain positive on the growth story to attract capital as well. I mean, at the end of it, we are an economy where capital is the scarce resource of all the three: land, labor, capital, that we talk about traditionally. So for us to attract enough capital as well, it's important to stay on track on 7 to 8 plus kind of a growth trend. Uh, that's something that's in the short run doesn't seem very, very, I would say, likely. One is hoping, or given the kind of confidence in underlying trend in economy, in the economic survey and in the budget. So, I mean, as an economist, I only hope that that's a true
Correct.
assumption and it actually starts to show up.
Okay, okay. Uh, the government has, kind of offered many stimulus packages in last 2 years. They also extended the scope of PCLGS and, kind of PLI or affordable housing. Do you think it will add? I mean, considering the fact that there is a fiscal space available, do you still think that the government will have a different pressure because of the extension, and this will continue for another 1 year now? What kind of impact do you see of this extension on the government's balance sheet?
So, yes, there have been many support programs that we've seen in last 2 years, and if you see the kind of revenue expenditure on most of these subsidy items has increased considerably in last 2 years. Uh, Now this additional extension onto certain impacted sector is not likely to impact the government balance sheets to a large extent. I mean, the numbers are likely to be less than 0.5% of GDP at this point of time, just rough calculation. The important point is that these were the steps that also helped to save us from the worst. So when we start looking at, we do focus on the government balance sheet, but what we kind of tend to miss in this analysis is that had this not come through, we would have seen worse conditions on these sectors and the wages in the sector, and hence the overall growth impact as well. So the fact that we are able to come back and catch up with the output level within 7 quarters is something that has been possible only because of these steps. A couple of sectors still remain scarred and they do need support. So, I mean, I don't see that as a major expenditure item. There is some expenditure switching, obviously, from some of these crisis era sectors onto the service sectors that are still impacted. So we'll see certain switching in terms of sectors, but not overall impact on the government balance sheets.
Okay, that's a very important point. Uh, so, what is your view on the 8 to 8.5% of GDP? It's a conservative one. It's quite achievable. Obviously, it doesn't look ambitious for sure because we also spoke about the double-digit growth earlier, and now at least we have come to a level where it looks a little achievable. But what is your view?
So, I mean, our forecast at this point of time runs anything between 7.5 to 8.3. So it kind of overlaps with what our internal forecasts are at this point of time. But do remember, it's a projection for the full year. And there are
Yes.
multiple uncertainties at this point of time that we are taking in. I mean, there is an assumption, even an economic survey, on oil prices remaining at a certain level, geopolitical tensions not
Yes.
escalating, on paper not having an impact. So all of us are working on Excel sheets with some of these basic assumptions, and that uncertainty, at least for the short term, hangs heavy. So I see a more downward risk to this 7.6 to 8.3 that we are talking about. Let's hope things turn out better in the second half.
Well, truly, let's hope that. I also wanted to take your view specifically on the formal versus informal economy. After GST, there are a lot of changes happened specifically in the informal economy as well. But what kind of progress do you think how we have made specifically towards formalization from the informal sector, and does that also have some impact in terms of on the economy? Because after demonetization, there was a big impact on a lot of businesses, right? So now everybody wants to move towards the formalization from the informal economy. How do you think that is shaping up?
So, my view on this is again the whole impact of formalization in terms of employment and hiring versus formalization in terms of payment and all is very, very different. So, for
Hmm.
example, the economic survey has a chart that kind of describes in terms of each sector that which are the sectors where the concentration of informal employment is very high. And if you look at it, for example, real estate figures with 84% of employment, which is informal. So
Hmm.
while on one side we are talking of digital, we are talking of financial inclusion, we're talking of formalization in many sectors, do
Hmm.
remember that is not necessarily translating onto formalization on employment side as well. And hence,
Hmm.
what you call as informal sector need not necessarily be your mom and pop shows or the furry sitting outside. It's also very much present in the so-called formal sectors. So that's why I gave you the example of real estate. And
Hmm.
hence, you might have policy steps that pushes towards formalization, and we do see in the pandemic world where the formal world is becoming much more healthier than the informal side. But given the fact that employment trends are still not as dynamic or changing towards formalization, the income impact actually essentially follows the employment and hence consumption side. So to that extent, I really don't see it as a picture of what the markets are saying, where your formal
Hmm.
side profit levels are very high. Even there, if you notice, your top line growth doesn't really necessarily match up with the wage growth in many of these sectors. So to that extent, for me, formalization would really come through when we see that happening in the employment statistics as well. And that's a little long way through, I would say. That's another of the structural change that the economy has to see.
No, no, I think that's a very valid point that you raised on the employment side, because even yesterday we were looking at some unemployment data, not the employment, but the unemployment data in the economic survey. And there are hardly few indicators which you could believe on, because there are no indicators as such because of the informal. But on the other side, now the government is actually betting high on the products like GST, which is giving them a contribution which is really large. So again, not a very direct but very hypothetical question, Rajni. How how do you think this gap will play a major role? Because at one side, the employment ratio will also be important in terms of looking at the growth of the country, but we do not have that strong data because of the informal sector, which is very huge. So, is there any solution? Is there any what you can say gap that the government can fill?
It's a gentle trudge. I mean, it's not
Hmm.
something that can be done over a day, over a year, or even over 5 years. It's something that has to structurally change in the economy. For long, and before COVID, we've been talking about how skills don't match. Now they don't get the right kind of skills they want to hire. At the same time, we've been talking to corporates who kind of mention how it's easy to keep hire people in contracts and not keep them as a permanent hire. So there are structural issues in terms of employment regulations, in terms of skill upgradation, in terms of the education, and these are big changes. They don't happen
Yes.
overnight or over a year. So I'm glad to see a 25-year thought process, or at least even a 5-year thought process towards this. We did do very well in the IT wave in 2000s, late 1990s and 2000. One
Hmm.
can only hope that this current decade now brings in where we do manage to catch up on the skill side and get on to the hiring side. But do remember, all of this only comes through when you see a consistent rise in income level. That would be a sure sort sign that these we have material gains happening in these skills or employment or these gaps. Otherwise, we will have numbers, we will have surveys. Each of them will have different conclusion. It will be difficult to figure out where our realities lie. So somewhere in between, and it's important to see material gains in income level to be able to figure out that the informal side of economy is also gaining. So I
Hmm.
think some of the lead indicator would be in terms of consumption numbers rather than GST numbers.
Okay, there was an interesting statement. I mean, we have been talking about it a lot, and the statement was our economy is benefiting from the multiplier effect. That's what the finance minister said while presenting the budget. When we went into the pandemic, there was a great noise about how India will benefit from China, right? And we are still, thinking about how will we benefit about from such things. At one side, the foreign investors are very bullish on India, but are we actually taking, is the Indian economy taking a much benefit out of it? Because we are talking about the establishing a semiconductor industry, but that will take at least 7 to 8 years to perform. So how do you see that India is actually getting a multiplier effect? I mean, saying is, I mean, that's one part of it, but are we actually getting that effect? Are we actually getting that benefit?
So the multiplier effect discussion actually comes in the context of capital expenditure, where compared
Hmm.
to revenue expenditure that has a multiplier of 0.87, capital expenditure has
Yeah.
a multiplier of 2.45. The material increase in capital expenditure has only come through in last 2 years. Before that, almost 87% of our expenditure out of government balance sheet was on revenue items. So in that sense,
Hmm.
2 years is too small a time for capital expenditure to show up. Having said that, India remains a consumption story, a market story for people all over the world. What the
Hmm.
policymakers are trying to do is make it work for us domestically as well. So
Hmm.
that bullishness of foreign investors in Indian market comes from the fact that we are one of the largest market and relatively well growing. That's not likely to go away at least till 2030 is what I maintain, where you see that kind of a tailwind working in our favor. What government or these capital expenditure plans are essentially trying to do is make it work for ourselves. And
Hmm.
while we're not seeing the China replacement story working very well,
Hmm.
what these efforts do is that whole make in India, Atmanirbhar Bharat. Let's focus on our own domestic market, which is big enough to uh, bring on this impulse within the economy or bring this kind of a market size to address. You're right, it's not something that works in a year or in a matter of 5 years, but the kind of, let's say, digital investments or the kind of private equity venture capital investments or FDIs we've seen coming through, they've been able to go beyond the traditional sectors to
Hmm.
identify where does the opportunity lie and kind of add real value addition much beyond what our GDP numbers are showing. So there are pockets of economy doing very, very well because they have been able to identify this niche demand segment and kind of address it. So as long as this keeps on growing, this will multiply into the economy, and we'll see more. And hopefully by then, the capital expenditure side of it, that multiplier starts adding up to the momentum as well. So hopefully, next 3 to 5 years, we do start seeing all of this working together and kind of working on
Right.
our dividend.
Okay, very well said. I would also like you to see. how this whole digital central bank digital currency panning out. I mean, there are very few countries who are actually thinking about this, and the finance minister took a very bold step and told us that 2022 2022 to 2023, they will actually roll out the central bank digital currency, which is digi rupee. How do you see that actually panning out?
So, in the press conference after budget, actually the finance minister took a lots of pain to kind of differentiate between that this is a digital currency, quote unquote, by the central bank
Hmm.
and not the cryptocurrency as people call it. And she
Exactly.
took pains to explain that the crypto is not a currency. So, yes, it's a forefront. I mean, it's one of the first central banks to come out and set a target, or at least, if not central bank, the finance minister has announced that this year we should have a digital currency. That's something that
Hmm.
was the call of the day. I mean, it's something that already the market was moving towards. If not central bank, people would find other channels to make payments swifter, to make payment easier and fast and cheap. Glad that RBI actually look at the history has always been in forefront in terms of what currency market, political adaptability, and many of these issues. So once again, glad to be on the front line of this.
Hmm. No, no, true. In fact, RBI had made it very clear that they are not very happy with the cryptocurrency, but they will look at CBDC at an appropriate time. I think they said this almost 1.5 years back, and the government actually take what RBI said forward. So let me take one last question, this question is again a follow up on what was my first question. So considering what has happened, it's not just infrastructure, or it's not just capital expenditure, but the Gati Shakti program of PM, or economy, or whole sustainable development programs, roads, railways, ports, airports, logistics, waterways, they're trying to build everything and interconnect everything. Considering all this, ecosystem which they're trying to build, uh, do you see now there will be change in the credit growth? Starting from maybe tomorrow, starting from the 1st April itself, do you see the mid corporates, or I'm not talking about the large, I'm talking about the mid and the small, will come to banks and start crafting their capex plans?
So, we already have a data point that tells you that credit growth has started picking up. And as I mentioned, in the moment we see
Hmm.
substantial gain in demand levels, there is no reason credit growth will not follow up. I mean, everything else in the ecosystem is ready and set and waiting for credit growth to pick up, for investment demands to pick up. And I'm personally of the view that we probably just in the phase before that and a quarter max, and we should see this cycle turning because government is also front loading. All the other conditions are set. If the economic survey were to be believed, then the debt levels are also not high on the household side. Corporates already sitting on healthy balance sheet, so we should see demand level coming and then credit growth. So I'll give it max a quarter for it to really show up in a sustained double-digit credit growth.
Sure. Notable, I think, points. Thank you so much for uh, sharing time with us, and sharing this perspective on the budget day. Thank you so much, Rashmi.
Thanks very much. Pleasure being here.
Thank you, ladies and gentlemen, for joining on the ETBFSI Budget 2022. Thank you so much.